What is the market telling me this week on this Black Monday, as everyone's calling it? Welcome to the Nick Rutherford Report. And the market is either going to take advantage of you or you are going to take advantage of it. So hit that like button, subscribe to this channel, share this with someone who would get a lot out of it, because this is the place to be for the financial news that matters for your net worth. Now remember, everyone is going to lose money sometimes. What matters is that you win big and you lose small. And that's what the best investors in the world do. They invest in things that when they're wrong, they lose a little. And when they win big. So let's look at what the market is telling me to do right now. Here we can see the Japanese yen plummeting against the US dollar. So this has sparked tons of news articles about the carry trade blowing up. Is this happening? Is this not happening? I don't have access to that information, and I'm not smart enough to know every single hedge fund that's getting a margin call and causing stocks to sell off. Why are they selling off? Was it the unemployment? Was it the carry trade? Well, the financial news media loves to make up reasons for why things are happening after the fact. And I don't really care. All I need to know is the market is selling off. So what is it telling me? Let's look at it, because we have news articles coming out like this. Black Monday, futures plummet as the VIX hits 62. Japan suffers the worst point drop in history. And it's true, the markets are going way down. But what I care about is the fundamentals. So is the carry trade really causing a bunch of margin calls that are going to reverse after all the selling? That's an interesting thing, and we're going to talk about that. If you don't know what the carry trade is, it is where hedge funds are borrowing or going short Japanese yen and through a bond, like they're shorting the bond, they're borrowing and they're using that as collateral. I'm not an expert here, I'm just trying to get the concept. They're using it as collateral against the US bond because they want to pocket the difference in spread on the interest rate because one's so small and the other is larger. And then they're leveraging up against those bonds to buy equities, allegedly. I say allegedly because everyone on the internet wants to say this thing and imagine that they're so smart by telling you how the intricacies of these things that they can't actually even see are. At least that's my interpretation of it, because there's no way for me to know what every single hedge fund in America is actually doing, because they don't have to tell you. They have to tell the SEC when they file the Form 13s, the F13. Am I saying that right? I'm kind of in a rush. Yes. What I'm trying to say here, we don't know because we can't see their short positions. We can only see their long positions, and that's 3 months and 45 days later when they're filing. So you know, how everyone can say this is 100% the carry trade. Like, it could just be that when they see selling, it begets more selling and people freak out. So one of the possibilities is it's a carry trade and people are covering, they have to sell, and it's driving companies down. That's fine. Another thing that's in the news that's important to point out here is Iran says it must punish Israel and begins clearing the airspace. Everyone has noticed this in the news, and you know what? If you study the past to predict the future, which is what I like to attempt to do, many times, almost all times in my short amount of research, I'm just saying that because I researched it online, I looked it up, and I saw a graph that substantiates this. So it looks to be true, but you should always do your own research. But it looks like stocks go down, and everything goes down when there's a war until the war starts. And then magically, all of the confusion, the uncertainty is over and the war started. So then stocks go up. So this is another interesting thing. Like, you have to imagine, did the unemployment hitting 4.3% really cause everyone to freak out on Friday and say, all right, this is in, I'm throwing in the towel? Did Warren Buffett really call it the top, according to all the news articles circulating around like that? Well, what I want to look at is the fundamentals, because there's more important things under the surface that the market is telling me. Is it right? I don't know, but this is going to be my interpretation. See, NVIDIA reportedly delays the next AI chip as shares tank on the global sell-off. Well, if everyone wants chips and it's harder to get the chips than it was even before, that means they're going to want them even more. And NVIDIA is going to make even more money. So given all of these, I want to do a quick update and just talk about the two situation that I see as far as what's happening now. Well, maybe the carry trade is blowing up, and this is going to wind down if that's what's happening. Because if the carry trade blows up, once everyone who's going to sell from their margin calls has to sell, well, we bottom. And then we continue along back to where we were, which is going to be either the economy expanding or contracting. But this seems like a singular kind of exogenous event that's happening. So unless you're trying to day trade, I'm not really too concerned about it. In fact, almost all of my positions are up because I bought them a year and a half ago. The only position I'm down a little bit on is NVIDIA because I may have bought it too high. But everything else, I'm up tremendously because the market told me to buy it during fear, and that's one of my principles. Buy low so I can sell high. And I still think that there are going to be tremendous opportunities to buy things at great prices. Now, another thing that I see could be happening right now is a sell-off because of the Iran war. And that could be contributing to this as well. And guess what? If history repeats itself, usually once we start a war, or once the war starts, whether the U.S. is involved or not, that marks the bottom. So what's next? Well, this is the same thing that I've been saying on all of the videos here. Unemployment could get worse, and the market could grind lower. Or all of the fiscal that is coming through, the government spending, the massive government spending that everyone knows about, is going to propel the market higher because nothing else matters. It doesn't even matter about the unemployment. It's entirely possible that Google, Microsoft, Amazon continue to spend on AI, and the digital revolution continues, and those companies continue to grow earnings. Let's quickly look at some specifics at the market. See, right now, if you look at NVIDIA, it's still way up over the last year. Yeah, is it down? It's only down slightly more than this correction that we had last year. In fact, today, it's been going up from where it opened at the market. I know it opened down, but you can look at this bounce. It's bouncing pretty hard. And why is this so important? Because everyone says the AI bubble has popped and NVIDIA's in a bubble. This has been all the news articles. Well, remember what I pointed out on Friday. If you look at the capital expenditures of Microsoft, let's look at the data. What is the data telling us? Well, it was at $9 billion for their property and equipment, and now it's at $13.9 billion. Is it like 9.9 or 9.10? Around 10 the year before? I'm sorry, the quarter before. And now it's up almost to 14. That's like a 40% rise. So do you really think that NVIDIA is going to sell less chips? Are they selling less chips right now? Well, here's the data telling me that Microsoft is probably buying more chips. A lot more chips. 40% more chips, in fact. I think their cloud revenue was up 20-something percent, 29%. Like, let me just see if I can back up here. But their data center revenue was way up. Cloud revenue. There it is. Look at all this. The cloud revenue growth year on year. I don't know why there's a slash here, but it's up 21%, 23%, 24%, 24%, 23%, 21%. So this is a company that's growing its cloud revenue up that much. Like all of these commercial bookings growth, 17. I'm just trying to figure out what the slash is here. What's the difference? One might be the currency adjusted. But all of these are way up. Like, look at this. 29%, 31%, 17% for Q4. This is not a company that's like bad things are happening to. So let's look at a few more things from the market. Well, Bitcoin's down, but if you look at it, it's still pretty high. And we're pretty early in the cycle. And my point overall is I want to look at the entire market because this looks like a blip. As of right now, it looks a little bit more than the correction over here. And maybe a little quicker than the correction here, but it's not even as big as the correction we had back from July last year to October-ish, the beginning of November. And it's very small compared to this whole drawdown. My point here is the data looks good to me. Now, of course, it could get much worse. But stocks never bottom on good news. They bottom on bad news. So to me, this Black Monday thing is really kind of overblown. Yes, I'm personally losing a lot of my gains, and that's fine. But one of the most important principles that I want to take away from this, and I invite you to take away from it, is that you need to set your emotional set point for your capital. Because if I think about, I was up super high a month ago and now I'm down 10%. Well, now I'm going to start to emotionally freak out and worry because, I'm losing money. But if I set my emotional, and I need to come up with a good word for this, but if I set my emotional point 2 years ago, how much capital did I have invested 2 years ago? And I'm way up from 2 years ago. Well, yeah, I'm not up quite as much. I'm losing some of my gains a little bit, but I'm still way up from where I was. And when I think about it that way, and I set my emotional set point on my capital from a few years ago, and I look at how I'm doing over time, then this just becomes a little blip. Now, of course, I wouldn't be surprised if we go down and down and down. And if the data gets worse, then the market will tell me something else. But right now, this is happening so quickly, there's nothing really that I'm doing. In fact, Nvidia is bouncing harder and harder. It started the day off, I think it was down to 92, and now it's already up to 101. And the reason I'm pointing to Nvidia is because this is a chip leader, and I'm expecting that they're going to beat earnings just based on the fact that I see CapEx up. Now, of course, I could be wrong, but AMD also had significant revenue growth. So to me, this is just a blip. It's not a Black Monday. Everyone's calling it a Black Monday. They want to get clicks, but my time frame is a few years from now, 5 years from now, 10 years from now. And all I need to do is ask myself, do I need more of the things? Does the world need more of the things that the companies I'm invested in? I'm invested in chips, so are we going to need more chips or less chips next year? Are we going to need more chips or less chips the year after? And then when I couple that with my emotional set point of I'm higher than where I was a few years ago, I can sit back coolly and relax, make calculated decisions, because when the stocks are going down, at some point, this is going to be a great time to buy. But I don't really know exactly what's going on right here. I need to sort that through and the market will tell me, but it's going to be time to get excited because there are going to be a lot of buying opportunities. And the most important thing that I need to do is not freak out because then I'll make bad decisions. So this is just what the market is telling me now. I'm not too worried. And plus, if something really, really bad happens, you remember that Jerome Powell has said, well, we got a tool for that. And his tool for that is to give everyone helicopter money. So at the end of the day, assets can go up, even if their earnings don't go up because they just debase the dollar. So as long as my time frame is not, I need to sell and spend this money today, I'm not too worried because the economy typically goes higher over a long enough period of time. I do find it very interesting that Warren Buffett was selling out of Apple because, of course, the insiders always know. So all I can do is ride the volatility and see what happens. And as long as the fundamentals look good and I'm in good companies where they're selling products and services that people need and they're going to need more of in the future, and I'm in at a fair price, I think I'm going to be okay. So that's my take on what the market is telling me. I'm not too worried about the recession yet. If you need to spend your money now, I'd be very worried. But because I'm invested for the next 3, 5, 10 years, I'm not worried, and I think there are going to be lots of great opportunities. So I'll have another market update when I see it. I hope that you're all doing good and don't make any emotional decisions. That is the key. Just stay calm and remember the old Rothschild quote of, when there's blood in the streets, buy, even if it's your own blood. Now, it might be a little early, but that's an important quote to remember. In fact, if things get worse, I'll be even more excited because there will be more blood in the streets, and then I can buy fantastic companies at even cheaper prices, and they're just going to give me more and more gains over the next 5 and 10 years. But the key is to be in the right companies. That's what the market is telling me this week. Leave me a comment. What's on your mind now? If you're excited to buy a bargain, any comment, any like will be great. Just helps this spread. Have a great week. I'll have another market update later this week, or if something like another Black Monday happens, which maybe we'll have Black Tuesday tomorrow too. We'll see. All right, have a good one. I'll talk to you later. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.